Hello and welcome to Extreme Crypto. Today in our Anatomy of Japanese Candlestick, we'll be discussing two important candle and two candle you need to understand if you want to actually know how to analyze Japanese candlestick and trade with them. So, most of the time people just see the candlestick and they don't know the story which each candle is telling them, or the combination of candle, the stories they are telling. And this is very important. This will determine whether you should open a trade or close a trade or still remain in a trade. You understand now? So some candles can mean reversal, some candles can mean continuation, and some candles can mean that you should exit a trade. So we'll start from the basic now. The basic candle you need to start with are the two candles we'll be discussing today, which are the hammer candle and the shooting stars. So let's get started now. The hammer candle. This is how it looks like. It has a very small body with a long lower wick or shadow, and the upper wick will be very small or insignificant or no upper wick at all. So most of the time you might have it that you have a small upper wick, just like we are seeing it here now. You have a small upper wick, or it should not be there at all. So let's discuss about the Japanese candlesticks before we go about the psychology behind it. So this candle is also known as the pinball, just as we have seen it here now. The way it looks, it is also known as the pinball. It is formed when the opening and closing prices are close to each other with a lower wick. So if this is a bullish candle now, it opens around this point here now. This is our open and this is our close. So they are very close to each other. That means the body of a hammer candle has to be relatively small, just like what we are seeing here, with a long wick or shadow. So this is the long wick. So this is very important. This has the characteristics of a hammer candle. So if we are seeing this now, we should know that we are looking at an hammer candle. This candle wick must be at least 3 times the size of the body. So what we are seeing here now, this body here now must at least fit into this long wick 3 times. So if you are to put this candle, if you are to arrange it into the wick, at least we must have 3 of the body in the wick. So it might be more than that, but at least we must have 3 of the body there. It is a bullish reversal candle when it is found in a downtrend. So for us to know that a candle is an hammer candle, we have to look for it in a downtrend. So when it is formed in an uptrend, it has a different name and it has a different purpose it's serving at that particular period of time. So for a hammer candle to be a hammer candle, it has to be found in a downtrend. For efficiency, it should be used with other technical analysis tools to confirm a trade opening. So if you want to open a trade with hammer candle, you should also combine with other technical analysis tools like volume, like your other indicator, like maybe RSI, MACD, or your Bollinger Band. Think of your EMA. Think of any technical analysis tool you are using. You cannot just pick the hammer candle alone and say, since I've seen a hammer candle here now, that means the market is going to reverse. So, and the meaning of reversal here now is that the market might remain flat at a particular period of time, or it might turn to an uptrend. So that's the meaning of reversal. That is, the initial trend, the initial market trend is about to end. So that means that the bears are getting weak when we see hammer candle at the end of a bearish trend, at the end of a downtrend. The color is very insignificant. So what we mean by the color is significant is that if you look at the end of a downtrend, and we'll see that the hammer candle form is bearish. What we mean by bearish is that maybe the candle is red, so it is still serving the purpose of hammer candle. And again, the candle might be green, it is still a hammer candle, so the color is insignificant. So whether it is red or green, black or white, what is very important is where it is formed at the end of a bearish trend, at the end of a downtrend. Now let's discuss the psychology behind the formation of hammer candle. So if you have a hammer candle, let's draw it again for us to understand what is going on. A long wick and a small or no upper shadow at all. So what this is trying to tell us is that, let's say for example, this is bearish, that is, this is red candle. So what this is trying to tell us is that if this is a red candle now, it opens around here, and it closes around here. So this is the low and this is the high. Here now, what this is trying to tell us is that when the candle opens around this place, when it opens here, it opens around this point here, and it went up and it started coming down. So when it goes to this particular period of time, what it's trying to tell us is that the bear came in around this point where it is the highest the candle reached for that particular period. The bears, they came in and pushed down the price, and it got to this low. So when it got to the particular point now, the bulls, they came into the market and pushed it up back to this particular point, which is where the candle closed. So the bulls came in here and pushed it up. What this is trying to tell us is that we have seen that the bears are getting weak already, so they could not push the price down any longer. So that is why this candle is formed. They could not push the price down any longer. That is why this candle is formed. So what we usually do is that if you want to trade this kind of candle now, you wait for the next candle to form, and if the next candle that formed after this hammer candle is bullish, so that means you can open a trade and enter, and also confirm with your technical analysis too. I hope we understand the psychology behind it now. So let's take an example and see how it looks like in the chart. For a bearish trend now, the trend is coming down. Let me change the color of my pen. So we can see that we are in a downtrend from this particular period downward like this, until we get to this area here now where we have our hammer. So from here now, we can see that at this particular point, this is the end of the downtrend, and now that the hammer has formed, what we would do to trade this particular formation now, we would wait for this hammer candle to form, and after it has formed, we have seen that this is a hammer candle. The next candle after it, we wait for it to form, and the next candle after this is bullish. The next candle after it is bullish, is green. So we can put our entry at this point here now. So when we put our entry at this point, we put our stop loss somewhere around here for our stop loss. And if we look at this formation now, we can see that from here now, the market moved up, and there's a little retracement and it went up again. Little retracement and it went up again. So we can see that this hammer has reversed the trend that we had previously, which is the downtrend, and now it has formed at the end of the downtrend. So this is a typical hammer candle, which is very important for us to understand. So if, for example, now we see something like that form in an uptrend, it is not a hammer candle. It is not a hammer candle. There's another name for it, and it has another purpose it serves. So we'll be discussing about that later in the future. So this is how to trade the hammer candle. We can drop questions in the comment section where it is not clear. So let's move to the next candle we want to talk about today, which is the shooting star. The shooting star is the exact opposite of the hammer candle. We can see here now, this is having upper shadow and also a relatively small body. So let's look at the characteristics of these shooting stars now. Now this candle is also known as the bearish pinball, just the opposite of the bullish pinball, which is the hammer. It is formed when the opening and closing price are close to each other with an upper wick or shadow, just like we have seen here now. The candle size must be at least 3 times the size of the body. The candle wick must be at least 3 times the size of the body. Just exactly the same for the hammer. It is a bearish reversal candle when it is formed in an uptrend. So when we see this at the end of an uptrend, we should know that the market is about to reverse. And like I explained reversal for us earlier, the market can remain flat for a period of time before deciding on where to go. But what we understand about reversal is that the trend we are coming with is coming to an end. So which is an uptrend. We are coming with an uptrend and it is about to end. So that means we might enter a bearish trend very soon. So that's the meaning of bearish reversal candle. For efficiency, it should be used with other technical tools to confirm a trade opening. Just like our hammer, it's the shooting star also needs to be combined with other technical analysis tools to confirm trading with it. The color is also insignificant here now. The color can either be bullish or bearish, just like we explained in the hammer candle. So let's look at the analogy here now. We should get this one straight now, since it is the opposite of the hammer candle. So let's say we have something like this. Let's believe this is bullish. Don't forget that we already said it that it could be any color, whether bullish or bearish. It could be green or red. But where it is formed is what is very important. This has to be formed at the end of an uptrend for us to call it the shooting star. So just from the way it is formed, that's where you got the name shooting star. If you look at it, it looks like something is falling from a distance. Just like when the star is falling, it falls from a distance and starts going down. So that is where it got the name shooting star. What this is telling us now is that the candle open here and it closes here. This is the high and this is the low. So what this now is telling us is that, so when the candle opened here, it opened here and went low a bit, and the bulls came in and pushed it up to this particular high. So the bears came in and overpowered the bull and brought down the candle from this particular point to this particular place where it closed. So from here now, what we understood from here is that the bulls, they came in from here and pushed it up to this particular high, and the bears came in and pushed it down. So what this is trying to tell us is that the bulls are losing power. whether this candle is red or green, the bulls are losing power. So the bears are already coming in. So what we just need to do for this kind of setup, which is the shooting star, is to wait for the next candle and also combine it with our technical analysis to know whether it is actually right for us to enter. You understand now? To know whether it is actually right for us to enter. That is the psychology behind the formation of this candle. So let's go and look at a chart and see an example of how it looks like. In this kind of formation now, I think we are having like, for me now, I think I can see 2 shooting star candle. From here now, let's take it from this point. We are in an uptrend until we go to this candle here, which is the shooting star. And what we told us about the shooting star is that it is formed at the end of an uptrend. It is formed at the end of an uptrend. And when it is formed at the end of an uptrend, we wait for a confirmation candle before we enter, or we combine it with our technical analysis tools, which can be our volume or other technical indicator. So from here now, we can see that after our shooting star formed, from here, the next candle that formed is bearish. So from here, we can enter this setup. We can short the market from that setup, and our stop loss will be somewhere around here. And if you look at it, the market actually starts falling. Even though if you missed the first candlestick, we can see that another candlestick here now, this one also, is a shooting star formation. So if we have entered our trade here too and put our stop loss somewhere around here, we will still have made money from this setup. I hope we will understand the setup now. So that's the first one I can see here now. So we have another formation somewhere around here. So we are from here, let's say we are in an uptrend. From what we can see, we are in an uptrend. And from what we can see now, this candle is a shooting star. That means we will need to wait for a confirmation. And let's say we open our trade from here now, and we'll put our stop loss somewhere around there. So the next thing, we can see that the market start falling. And if we had entered the setup here, we would have made a lot of money. So that is just the simple analogy behind the shooting star and the hammer candle. It is pretty straightforward to trade. What we just need to know is that we don't just pick out the candle on its own. We have to combine it with our technical analysis tool, or wait for a confirmation. If you say something is a bearish reversal candle, that means when it is formed in an uptrend, we need to wait for a confirmation to be sure that it is actually going to reverse the uptrend. You understand now? And so far so good. We have seen the way this candle work and reverse the trend, whether it is a hammer, whether it is shooting star. Just follow the simple explanation and psychology behind them. So most of the time, you don't even need to remember the name of the candle. What you just need to know is the psychology behind the candle. So for example now, this is an uptrend. You can already see that the bulls are losing power. So when it got to this place, that means the bull cannot push the market beyond this particular place again. Beyond this particular place, the bulls cannot push the market beyond that. So that means the bears have come into the market and they have taken over. So we just need to wait for a confirmation to be sure that that thing we are seeing here is actually real. So, and if you look at it now, it is followed by a very long red candle. to show us that the bears have come in with full force to take the market by force. So we can also combine with our volume to know what is actually going on in the market. These are just very simple setup to trade. So if this is just all you wait for in your chart, if this is all you look for, maybe you are looking for hammer or a shooting star, it is more than enough for you to trade and make money. You don't need a complex setup. Just look for something short and enter. Look for your hammer or your shooting stars and you enter a trade with your confirmation. And there's no way you want to go wrong with this kind of strategy if you have a tight risk management. Just put your stop loss somewhere around here, and if the stop loss is it, that means your setup is invalidated. So there's nothing bad about that. You don't need to feel bad. It's just analysis, and not all analysis are 100% correct. So what you just need to know is the psychology behind what you are doing, what you're analyzing. Do you know it? So it's just from little setups like this, little can do pattern knowledge like this, that will build on each other and form a very big one. So in the next video, we'll be talking about other candlesticks. So watch out for more on candlestick. Thank you so much, and catch our next video on other candlestick patterns that are important for your technical analysis knowledge. Thank you.